Investors are bracing for large price swings across stocks and bonds heading into what has been a historically volatile month for markets. Where is the best place to put your money and ride out this storm? Joining us right now is Nuveen Asset Management co-head of fixed income, Tony Rodriguez. Tony, you oversee $130 billion AUM. Good to have you on the show.
Thanks for having me, Maria.
How are you navigating these markets? What are you telling clients as you look to allocate and manage that $130 billion in assets?
Well, what we're telling clients is that despite the fact there's a lot of uncertainty in the market, everyone being concerned about Chinese growth, global growth, when is the Fed going to finally have liftoff on rates, that the market has probably had, in our minds, an exaggerated response to that. So the sell-off, the decline in risk appetite has really hit a lot of global markets from equities to fixed income. In fixed income, the areas have been hit the worst: high-yield bonds, investment-grade credit, emerging markets. We think there's definitely opportunities in the high-yield space and the investment-grade credit space.
And you mentioned energy, the energy space in particular, when you're looking at high yield.
That's been the most beat-up area. So there we think that definitely there's been an exaggerated move. Many companies are going to have considerable issues with $45 oil, but a lot of companies are being priced for $20 and $30 oil. We think oil will probably stabilize in here and have a very slow recovery into 2016. But lots of companies have the financial flexibility to survive that, and bond prices have really discounted a more severe environment.
Jim McAllister, this is the pond you play in. What's your take on energy right now?
Well, I agree completely with Tony. I think that we're going to see pricing for the next 12 months in the 40s, maybe creeping up to the 50s. And probably about 12 months from now or so, it'll start getting into the more acceptable ranges of the 60s and up. And so I agree that it's going to be a slow recovery over the next 12 to 18 months. And then I think we'll be in really good shape at that point.
Dagen.
Tony, is there a danger, though, within all bond funds in some way? Because the big mistake that people have made, it seems, is that there's an over-fixation on interest rate risk. A lot of these, but then they don't understand the credit risk that they've been taking. And I mean a lot of these professional managers in terms of the way that these portfolios were structured: short treasuries, long high yield credit, and things like that. I mean, I worry that there could be another leg down in this, and people don't really understand the risk they're taking in these bond funds.
Well, I do think that there is some misunderstanding among investors when they're buying a fund that is just called a floating rate product, for example, that's really getting any of their yield or spread or return from the credit markets. There could be a mismatch between investor understanding expectations and what's actually in the portfolio. Same thing could happen from a liquidity perspective. A lot of investors who might believe that there's greater liquidity because it's an ETF structure, for example, or a mutual fund, than what the underlying asset actually is. I don't think it's going to cause a large systemic risk seizure like we had back in the 08-09 crisis, for example. But I do think that there's going to be some disappointed investors when they see the result of their particular investment not really coinciding with what they were expecting to get out of that.
And it has to do with the broad backdrop of an economy that is sort of two steps forward, one step back, Deneen. I mean, this is the issue for all the candidates out there right now.
Oh, it is. It's a huge issue, and we need to hear more about their thoughts on the economy, what's going on with the interest rates, and how individuals are harmed because low-income and poor and lower-wage people are unable to really get a substantial return with their small investments if and when they're able to try to save money for their families. I was privileged to meet with Janet Yellen earlier this year with a group of conservatives. Our main concern was that with the low interest rates, lower income families are unable to try to save and have their money.
I'm just waiting for
spread
Trump
more further.
You're not going to get a yield.
Disaster.
You're not going to. I'm sorry.
She's a disaster. I'm just waiting for Trump, if he hasn't already, to call Janet Yellen a disaster, because that's his general word. Putin's a disaster. Obama's a disaster. So I'm assuming he would call Janet Yellen the same thing.
Have you heard
you
any?
forgot about clown.